Welcome to Markets Now. I'm Michelle Rook with Scott Varilek of Kooima Varilek. We're mixed in grains and cattle futures this morning, a bit lower, I should say, over in the hogs. And Scott, let's talk about this cattle market. We've got this big cattle on feed report coming up here on Friday. There's some bearish placements included in that, but yet this market is held up really well, especially technically, led by the feeders, right?
Yeah, and thanks for having me. It's been the case that the feeders are the leaders. I mean, that was the one market that could really bail this livestock futures out, and it's performed well, I guess, on that. Cash feeders are pretty hot. We had some rain in the south, so some of that wheat country is going to catch some of that demand as they needed some rain desperately, and now we're getting pretty wide shots of it, so that's going to create a little demand there. And then it's the everlasting question on the heifer retention. Is there less feeders out there because we're keeping a few heifers back? And that's been the large debate. And stories started to break last week of some reports that it's happening for sure. Well, yeah, I think it's more gradual than one would maybe think. So a lot of reasons why. We've got the extra costs, the labor shortages, and it's a lot of dollars that you're handling on these heifers. And for me, it's been pretty easy to slip a couple more on the truck and head them to town because it's really going to add to your bottom line there. So we'll keep watching that, but loving the action on the feeders coming up against this report where we're talking about bearish and, 104 placed, and we're trading very well. I was anticipating a little bit of a setback ahead of this Friday. I guess we're not there yet. We still got a little time yet, but it's just amazing how strong that they're hanging on, in my opinion.
Has the heifer retention thing started to be talked about more just because we've had better rains down in like the Southern Plains areas, those winter wheat areas?
I think we've been talking about it for a while. I think that's just a little nugget that we can throw in there because that's the answer we're all looking for. We've got a market that's near record highs, so we're all looking for anything we can to try to figure out when it's going to roll over, because you don't want to miss it, because we're at a good level and we've got a lot of risk being a cattle feeder here, the amount of dollars that you're handling. So we're looking at the cow slaughter numbers, and cow slaughter numbers are well below year ago levels. I mean, we're behind. It's a number that you can see, and it's not just now that it's happening. It's been over a little bit of a stretch here over the last half of the year, and we had cow prices that were so good. It was easy to clean up those old cull cows and say, if she can go to town, she can go to town. Any under average cow, she can go. And I think we've kind of dipped into that so hard that what's left, we've already had that opportunity with those prices to clean them up. And now that we're that far back, we've got cows that can maybe stay into the herd a little bit longer. So I think that's the way we're trying to rebuild to get more numbers, and maybe just a slight shift, to the heifers there as well. Excuse me.
Yeah, well, it is positive that the cow slaughter has started to fall below last year. Obviously, we've been kind of watching that. Let's also talk about cash prices on the Fed side of things. We haven't had a lot of cash here yet this week. Talk about what you see. Does the board look like maybe we could get some steady prices, or what are you seeing so far?
Yeah, the big run on the board really gave us a shot in the arm, just that little bit of confidence to say, hey, maybe we're done on this little gradual slip that we've had in live cattle prices. And the north was trending, steady to lower than the south. That just, stands for the large weight cattle that we have. Carcass weights are higher, and guys needed to clean up some cattle. We've had this great feeding weather, which, means a couple of things. We've got more weight on what we've got, and what's coming behind them, these yearlings that you bought off of grass, they're probably gaining 5 pounds a day on some of these cattle up here, and they're going to be right around the corner here. So getting them cleaned up, I think, is going to be pretty important here, and I think I would be wanting to on this rally. The odd thing about the cash is, it felt like last week in this negotiated northern cattle country, it felt like everybody was shipping their cattle south or to Colorado. I mean, they were all going to different places, putting a lot of miles on. So that, that's a friendly sign. Packers are still trying to manage these, generally overall tighter numbers is what we would what we test that to, but the fact that they're willing to ship cattle all the way from Nebraska down to Texas or over to Colorado from some of this northern country. So they're still scrambling, still looking to move cattle around. And I think that's keeping us moving. That's going to be the one thing long term that we're going to have to be aware of when we all have, we're used to making these cattle this big and we've got cheap grain. When they do want to grab the leverage back, we're feeding right into it for if they ever want to. But I'm just really impressed. We coming into Thanksgiving and we're not really having a big setback, in a normal time when we're maybe slipping here in the end of November, and we can kind of rally through the end of December. But we're hanging on very well. Like what I see, the rally in the futures here is going to get us to ask a little bit more. There's only been a little small trade, a little, 185 bids opening in Kansas. That's a start. That's a good start. At a 187 to a small regional in the north. So there's not much to report here yet, but it's feeling pretty good. And we've got a little confidence after the futures markets had a little rally here.
Yeah. And just quick, you mentioned Thanksgiving holiday, that sort of thing. We should mention choice boxes actually have been a little stronger this week. Choice select spread has really widened out, hasn't it?
Choice select spread has been amazing. You're getting into the, mid 30s here. It's got to tell you a few things. This demand is really good. Right. I just think it has to be. I mean, it wouldn't be able to trade like that. It feels like, the rounds and the ground beef has maybe slipped a little bit, but that rib demand is really good. I mean, we're pretty impressed with it. That's going to make those grid premiums work very well for some of these guys. So I say that the demand's pretty good, but also with carcass weights where they're at, with us feeding them this long and having, this many days on feed, how are we not going the other way? Sometimes we can do that this time of year where the choice can lose some ground just because of the sheer supply of it. So for me, it's like, where are they? Is there other reasons why we don't have the choice cattle that we need? Is it possibly the feed additive that we have that we're using? Not real sure, but we've got stock market at, doing pretty well. And I'll lean more towards that we just have that good of demand out there for it.
And technically, I started off the show talking about feeders. The charts look really good. Live cattle, are we still holding where we need to on these decent Feb live cattle futures? Are we still above these moving averages and stuff?
Yeah, decent Feb. The front months have been lacking a little bit. We're kind of bumping our head right around these moving averages, and we kind of got ourselves, ahead of cash on Dees just a little bit. And I'd feel better if we had the front months leading the charge here. That would give me a little bit of a better feather in my hat. But it's underperforming for me in the Dees and the Fed so far. Probably not going to change that until we maybe learn something on cash this week or the cattle on feed report. So I think they're probably more content to sit here and wait. Whereas if you've got some optimism, you're maybe turning towards some of those deferred contracts, something further out a little bit, I guess would be my only take on that.
So hogs, like we said, maybe seeing a little setback here this morning, and we've consolidated now under last week's contract highs. And so do you think we're going to hold in here pretty sideways? I mean, we bounced off support yesterday. Is that going to hold just because the futures discount is there?
Pretty good correction. And I think that's what all of us have been maybe waiting for. Maybe not all of us, but myself for sure. And a large bulk of the traders that thought we were just a little bit of ahead where we needed to be. And now it's kind of that question, okay, are the boxes, here's the product, is the cash going to slip or not? But I think we're just getting a little too far under that cash index and running out of time on the December. So it's kind of okay, we got it under 80, thought that could maybe happen, but the index still up there at 89 is kind of making you wonder, okay, maybe we're going to close a little bit of this gap here before we would, put any more pressure on it. So probably a little bit of recovery here. We'll see if the funds want to jump in and really get some length back added on here. But I'm still interested in looking at the Feb and the April contracts as far as I would still like some protection on. I still don't trust it for a big rally higher. So I think it's going to just get a little bit more sloppy. Now that we've had this correction, we're going to have to try to find a range, which is hard to do in hogs itself.
Yeah. And June close to that $100 mark looks like a good hedge opportunity as well there. The grain trade, of course, corn and soybeans are down this morning. Wheat futures are to the plus side. Corn wants to try to follow wheat, but it gets pulled down here by soybeans. What do you see here? Corn and soybeans moving forward. How are we going to just trade sideways for a while in these ranges we've been in?
Yeah, it feels like boring sideways grain markets, and I guess that's okay. But and wheat has had a little rally here, but it's kind of following the break that it had, which was pretty sharp. So it's not like wheat's really set some new measures and went a bunch higher. So it's still at a low enough price and trading a little bit lower today. So with a lot of the outside news happening, you got to really try to wrap your head around it. So you got the Russia-Ukraine war escalating or being talked about more. That war's been happening for years, so it's not like it's brand new news that's coming in. I mean, it was earlier this week that it was we're going to get some more wheat acres in Ukraine, to now we're shooting some new missiles that the U.S. made. So just a lot of uncertainty around that. I don't know if it has enough confidence to say, hey, we're going to go do what we did last time the war escalated. But corn, as it trades a little bit sideways here, we've got a basis that's firming a little bit. I think you're wanting to take advantage of that. I don't have the news that's going to break these out to the top side. Maybe it's a switching, maybe to a mandate of E15. Is that something that's going to really help us out? Maybe not a large move, but I want to take advantage of moving some of this corn here as the basis has gotten better. They got all the corn bought that they needed off of the combine, and now maybe still trying to fill some of those needs here as this basis gets better. Big crop that we had, strong dollar that we have. I want to be moving some of that. It's been the beans that's been a little bit more of a struggle. In the futures market, we're right down to the bottom of the range now and looking like it's testing whether it's going to break out of the bottom side or not. But for me, they're all pretty low prices, so I can talk about them not rallying, but I also don't think they're going to get too much lower just because they're at a level that's appealing for the end user. Low prices cure low prices, but so chopping sideways, that's a long way to say, you're probably right. That's what it's going to do.
The thing that worries me, you talk about end user demand surfacing when we get down to these lows, but soybeans, we've had export flash sales the last couple of days. We had strong exports on all the grains this morning, and we are down. That's not a good sign, is it?
No, that we've got the strength in this dollar, and just looking towards the future. I think when we elected a new president, we knew that, hey, there might be some front loading from some of these companies as they're worried about tariff wars that are happening, and so that's the future of it. So we have to worry about that and try to decide if that's gonna escalate or not. So that's what's probably going to keep a little bit of a lid on it. But still, regardless, we're getting some of this grain moved, and that's what can hold the bottom. I mean, if we're going to raise a big crop and we're seeing it go out the door, that's what we're going to have. So if we didn't have that, I don't know how ugly we'd be, but that it gives you a little bit of confidence. That's why we can stay, at least hold the bottom side of these range and test it and not have a bunch of people chasing it, in my opinion.
Yeah. On soybeans, though, Scott, we got to get bean oil to quit going down here. That's been a real drag this week.
Yeah, pretty good correction there in the bean oil, and soybean meal has already been at such a low price. So when you got both of those heading for the gutter, definitely needs a little help. Yeah.
No doubt. All right. Thanks so much, Scott Varilek with Kooima Varilek. That is Markets Now.